Hello guys, welcome to this short video. I'm going to be showing you how I trade the AMD pattern, which stands for accumulation, manipulation, and distribution pattern. All right. So with this pattern, it's very simple, and I'm going to walk you through a live example that I had last week. So I'm going to be showing you how exactly I traded and how you can easily trade it and how you can identify the fake ones and so on. Right. So let's head onto the Discord. Let's follow the analysis that I did last week if I was able to catch this AMD pattern. Now we had a top-down analysis starting right from the dollar index, which you can see from here. The XY price currently sitting on the Monday CB after a steady up rally for 11 weeks. We could say the close of the month still will tell us whether we are going to have a correction, which will be into the monthly BC before a rally to deep premium, consequent encroachment, or further down push. This is how it looks like on the monthly chart. We have this fair value gap right here. So I was expecting maybe a push little down on DXY at that moment, right? And looking at it again on Euro USD, it's pretty much the same thing, like price coming to this fair value gap and selling much lower into the monthly BC. So I said 5 and 1 month, should we close a contraction for the month? A fill of the monthly CB to then expand lower into the monthly BC will be a possibility. So that's pretty much just what I was expecting. And now to top it all, on the weekly time frame, you had the price traded back down to this weekly OB, and we were kind of like rejecting. Right now you look at it from the daily time frame. The daily time frame was pretty much giving us a steady uptrend as a correction, right? Because we are actually overall bearish on Euro USD, but we have this correction which is coming from the weekly chart, and it's giving us a steady uptrend. And at that point we had this other block here, so price tapped into the other block, which is also an optimal trade entry. All right, and it is at a discount level. So from here we're expecting what? A good reaction, all right, based on this structure that is happening at this point. So we are expecting a correction at least, or a push back up to maintain this structure, maybe getting into the 1 month CB. All right, now that's just what I was expecting last week on this, but now this is based on the higher time frame. So on the lower time frame now, that's what we are going to be looking at. How can you trade based on the lower time frame? For the fact that price actually tapped into what this week, the daily order block, and we were having this reaction. It's just normal when price taps into a higher time frame PTRA. All you need to do is just to step down to a lower time frame and try to frame your entries, trying to get a confirmation. Whatever type of entry you want, whether it's trend line or whatsoever, that is the point where you get to choose your confirmation. All right, you choose your confirmation at that point. So here we have a 1-day order block, which is going to act as a resist support to price. So we're going to head down to what? Lower time frame, let's say like 15 minutes. We're trying to see this AMD pattern that printed so nicely on this particular key PD array from the coming right from the daily time frame. All right, now this is it at this point. Now you notice that before you actually, the way the market is booked on liquidity actually, and for you to be free or to be safe is when, before you try to get in, try to see if, or if the liquidity has actually been grabbed, if liquidity has been swept a lot before you actually want to get into the market. If not, you be the liquidity that will be swept before the market moves to its intended direction. So we had price cleared this low. All right, we had a stop hunt from here. That's our stop hunt right here. Okay, while price was tapping into the 1-day order block. So which means that early buyers were coming in at this point. All right, they even saw this what as a break of structure, but what happened was that price was yet to tap into the higher time frame PD array. So you have to be careful not to get into this type of fake order breakers and so on. All right, so somebody will say this is a breaker of structure and so on. Now this other one happened here. This was actually good, a break of structure, but at this point this zone was so messy, like you couldn't have had any clear indication that this is where price really wants to go to. I'll still be very much patient, because from here I don't have a clear fair value gap or an order block that is standing alone without linking a fair value gap into it. I will make a video on how I take entries based on other blocks. All right, the confirmations I need on that. Now we add this, now this clear break of structure. All right, this is now our change in state of delivery at this point. this is where I see the change in state of delivery at that point right there. So we have our change in state of delivery here, and then this now is what, like, this is a shift in market structure. You notice price failed now to make a lower low. This is a good sign that this other block is a strong one. If price is failing to make a lower low and then it's breaking a high, right, that's a clear sign that that is what the level is really strong, and price will likely be going to the opposite side. And now at that point, this was the closest liquidity to be grabbed. And if you could look at that from the sessions, you discover that it was the New York high. All right, New York high, and also the London high was as there as well. So that's going to be our target at that moment. But now you notice that after this break of structure, something happened that was very nice, giving confluence to the trade that we took. We had this zone, price was accumulating, busy creating liquidity on the buy and the sell side. At this point, many have seen what this break of structure here, this change in state of delivery. They are not getting in, they are buying, and selling. They're actually not wrong for buying, but the thing is, at this point, this is your price range from here. This is your price range. You can't be buying at what, at a premium level. It's wrong. You must buy at least at a lower price before you expect to make some profits. Okay, so this is our swing. This is our swing leg. All right, so you want to actually expect price to come back to a discount before you can engage to the upside. At this point, you have a better risk to reward ratio, and you have a better good trade to take. Okay, so at this point, when price was accumulating at this level, normally I wasn't expecting this so much accumulation. I was like, all right, price should just come back down, what, to this favor gap. Now the next thing I will do is, without seeing this accumulation yet, I marked out what, this fair value gap right here. This is what my BC right here. Let me see if I have entry 15 minutes. Okay. So we have this fair value gap right down here. Okay. Now, when this happened, when I saw this change of state in delivery, change in state of delivery here, I marked out this fair value gap. I wasn't expecting this huge contraction actually to happen. I was actually expecting price to pull back from here, come into this point, and I get into my buy position, and then I hold to this high right up here. So I was already having what, a buy limit order at this point, and my stop loss is going to be what, exactly at this low. Why is it here? Because price should not take this low again if this is going to work out. All right, so I'll be expecting something to target now this high. This was a risk to reward 4 arrow. Okay, this was 4 arrow, so I was expecting this to happen. But now when it consolidated for some time now like this, I say, all right, this is another confluence that we're having, what, an AMD pattern, which this one now stands for what, our accumulation. This is now our accumulation, and then now price is going to manipulate into what, the 15-minute BC as entry. All right, so this 15-minute here is actually standing as, is going to be price going to manipulate into it. Right, price is going to manipulate into it, and this is the manipulation leg, and then now we expand to the upside, or displacement. All right, we have accumulation, manipulation, and distribution. So we have this right here as our distribution leg. All right, this is simply it. It's a very simple pattern, and it happens all the time. And it's just basically what is going on with price. Price must manipulate to gain liquidity before it actually expands. So if you are able to study this particular pattern, let me do a textbook of it so that you understand much better. Now, price is actually going to be whether on a downtrend. Price can be on a downtrend, right? Now, you expect it to continue the downtrend. That's quite all right. We are in a bearish order flow. And now, at some point here, we have left another block right here. Okay, you will want to say, okay, you want price to come back to the other block, and that's okay. So we are expecting price to what, retest this other block and continue lower. Why? Because price is on the downtrend, and we've been having break of structure to the downside. And then now, out of a sudden, you notice price starts to accumulate from here. All right, price starts to accumulate from here. When it's accumulating like this, it's creating both buy side and the sell side liquidity. Many traders are now putting in their sell stops and buy stops in the market. Others are like, all right, if it breaks at this zone, then that's where they have buy stops. Oh my, we having buy stops at this point. So many traders have their buy stops here. We have buy stops there, and what? We also have stop losses for sellers. Okay, that's what we have right there. I'm going to explain. Now, at this point, breakout traders, they're like, all right, if price should be breaking this high, and then it wants to go higher. So they put their buy stops and they put their stop losses below this point. Now, that's just the liquidity that they have created already. The traders that are already selling, they are putting their stop loss at the high of this resistance, all right? And they're expecting price to actually break out down. They are not actually wrong. But the thing is, they've forgotten how ranges work, and they don't know about liquidity, as I will put it. But now you have this clear order block of fair value gap that is sitting right above this point. And remember, when price accumulates, there's a likelihood of a manipulation and then to a distribution, which means that this zone, as we see price accumulating, we'll simply put it what as our accumulation phase. All right, accumulation phase. It's very simple. Whenever you see price accumulating, you can just try to mark it out that, okay, this is my accumulation phase. Now, once you mark that out, once you mark your accumulation phase, the only thing you will need to do now is try to mark out where the manipulation can likely go into. Now, it could still be here on both sides, in the sense that maybe on a past price action right down here, we had what? Maybe you had a good order block that price was to retest, all right down here. And then this is what price could do. We could now get what? A manipulation to the downside instead, tapping into that order block, and what? We had now a huge distribution to the upside. But now, if there is no PDR rate right down here, or suppose that we're having our drawn liquidity right down here, or a load to be taken right down here, we now expect what? We expect price to give us a manipulation leg into this order block, and then now we have a distribution right down to this point, clearing the sell side and sell stops liquidity lying down at this point. Now, only with this, like I said, some traders were already on a sell position, maybe somewhere here, and putting their stop losses above this resistance level. And then now they were actually targeting what? The sell side liquidity, suppose that is right down here. They were not really wrong. They were right about the direction of the market, but you understand why now, right? Now, some traders putting what? Their buy stops. They're putting their buy stops here and putting their stop losses right down here, and they're targeting somewhere far right up there. Now, what the market is going to do is that it's going to activate their buy stops. When it activates their buy stops, now they are now a market execution. Now their stop losses are right down here. Price will go up, and it's coming back down. They are now going to see what? This as a break of structure right here. You will not see this as a break of structure, and they're now going to add more positions here. Like, okay, price should continue going up. But they don't know that this was this was what? An AMD pattern that was playing out. So the more you add your position here, price will take out this position and this one, and then you're going to end up with a loss. And now with this guy here who was selling, all right, putting his stop loss above this range, is going to be stopped out. All right, and you start shivering like, all right, we are getting into a buy program now, and you want to like, okay, this was a break of structure to then buy, and then you get into a buy again, you get stopped out, and then you will be thinking like, oh, price is doing this and up and down. You have to be very careful when you're looking at price, and you must know about your institutional order flow. I made a lesson on that institutional order flow, which is the best lesson for you to watch if you are a smart money trader or whatsoever type of trader, because the most important thing here is know where price is going to. If you know where price is going to, you can get in with whatever method you want. All right, it's that simple. If you know where price is going to, you can use a trend line to get in. You can use a Fibonacci to get in. You can use other blocks. You can use fair value gaps. You can use head and shoulder patterns, support and resistance. even indicators, so long as you know where price is going. That's the key thing. All right, so you can revisit the lesson. I'm going to put it the link on the description so that you can rewatch it. And it's very important, right? Because with this AMD pattern, you will not know whether price is actually manipulating to continue selling if you are not convinced that price is coming right down to this point or for some type of liquidity draw right down here. All right. If I don't know that price is dropping down to somewhere here, I will not be convinced that this is an AMD pattern, because this could be a breakout structure to the upside and price continue up. So it's very important for you to know where price is going to, and that's basically coming from what? A higher time frame. That's why with this example here, we noticed that price tapped into a daily order block. Now, if somebody did not see that, all right, price is tapping into a daily order block. All right, if nobody knew that, okay, we are having this reaction based on a higher time frame level, they would have marked this now as what? As another block. All right, you mark this out now as your other block. Now tell me that what? This is a break of structure here. You will say this is a break of structure, other block, stop hunt, and then you want to take yourself from here when price come back to this other block, just to be stopped out. So you have to know where price is going, where price is even coming from, and stuff like that is very, very important. All right. So guys, this is simply it. This is simply it about AMD pattern. You just have to see price accumulating. And now looking at this AMD pattern or path 3, it's also applicable with the Asian, London, and New York session. All right. It is still the same thing. Like most of the time, this accumulation could be during the Asian session. The Asian session will accumulate, London will open, and then spike a Judas swing to either a PD array like this one, which is going to be our manipulation leg, and then now it expands. London expands, and New York can possibly give you what? An optimal trade entry, and then another continuation lower. All right. This is simply just it if you're trading it based on sessions. Like you have your Asian accumulates, London manipulates to either of the sides, tapping liquidity, and then London, New York continues with a move. I don't think let me see if we can see that move. Anyway, this is simply it here again. All right, this is the Asian session. This here with the yellow is what? The Asian session. So normally with the Asian session here, we're actually accumulating, right? You could say that the Asian session was accumulating. Now here with the blue is the London session. So the London manipulated, taking the Asian low and tapping into an entry right down here. Okay, and then it expanded up. New York open, traded lower, give us another entry here, and then it went finally taking what? The high that was here, because this high was not yet taken by London session. The high was not taken by London session, and then New York open gave us an optimal trade entry and went further to clearing that liquidity. So I didn't really want to make this lesson that long. All right, I did not want to make this video long. All right, this is another example here. We are of our Asian session. It did not really do anything. London session open. We had a grab on the Asian session high. Then London open, expanded lower, giving a break of structure, gave an entry from this fair value gap, and New York came in and then gave the same thing at this point as a correction and a further move to the downside. It's just simple, guys. It's very, very simple. All right, but I don't really prefer trading it based on sessions, because most of the time sessions, the Asian session will likely not really give you a clear accumulation, right? Like for example, this accumulated through Asian session and it went even deep to London opening. All right, before we saw this manipulation to the downside and then with this entry. So you really want to just wait to see a good accumulation, you mark it out, and then you expect price to manipulate and then continue. Now, this is another example right here. From here to this point, this is an accumulation right here. Now, you notice that with this accumulation, we had this other block here. All right. This other block was unmitigated, but price was accumulating right down here. With the bearish order flow that you have in mind, you will know that price will likely manipulate into this other block, tapped it, and then continue the down move to the downside. It's very simple. All right, this now becomes what? Your accumulation. That becomes your accumulation. And then this other block, this is now what? Your manipulation leg. Manipulates now into this other block. Now you need what there is one thing you need to note too is that this manipulation is likely, it's not like it manipulates to space. All right, it's actually manipulating you into an order block or a fair value gap for an entry, or what, or to a liquidity strip. Right, it's not just random manipulation, it's actually manipulating to a key level. All right, don't just see price on space and you just say, okay, I'm expecting a manipulation to this level and so on, without any PDRA supporting that manipulation. So with this trade, you could have taken what? A good entry from this other block, and you expect price to drop lower to clearing the liquidity right down here. So this would have been a very good trade. About how many reacts? 8 arrow, right? So it's very simple, guys. Very, very simple. Very, very simple. You just wait for your accumulation. Price should accumulate, then give you a what? A break of structure, and then you get your entry. Now, like I said, if you are scared of this other block, if you are scared that price might not respect it, what you have to do is simply just wait for a break of structure. We had this break of structure right down here. All right, this is swing high, came down, break this structure, and what? You have your entry from this fair value gap. If you had that entry from that fair value gap, your stop loss will be at this high, and then you drive it lower. It's as simple as that. All right. I mean, if you're scared of taking an entry straight from this other block, or if you are not an order block trader, you want to see this displacement before you take your trade. All right. So that's it. So guys, that's simply it. I don't know if you understand. If there is any questions, leave them on the comment section and I will get back to it. Maybe we'll do another video explaining your worry and so on. So let me hear your thoughts about this video, and thank you for your support. Like and share, and let me see your comments about the video. Thank you, guys.